Fear of failure is good. Fear of failure will keep you up at night, planning and rehearsing and going over contingencies. Fear of failure will keep you training hard.
What's up, guys? Rico Capital. Today I'm actually doing a different video. I'm answering members' questions. I asked over last week around Friday, what are some questions you guys want me to answer and kind of go more in depth with? So let's get into it. This is going to be a kind of a series where I got a good amount of questions, so I'm going to break some of them up. I think this video I'm just going to answer 3 questions and kind of go in depth with it. So first one we're going with is failure, how to handle losing plus getting back into winning. Now this is kind of a good topic, really good topic actually, because I know this feeling very well that I could go weeks, days, whatever it is, winning, and then one bad trade has me second guessing life, everything. And so I think this is very important. And I do have in the Discord trading rules. This answers that for you. So I'm not going to show you guys this because a lot of this is only for the members. I am going to tell you about it though. So first things first, how to handle it is this. If you took a loss, you were either not following your strategy or you were breaking your rules in some way. So for me, if I broke my rules, then I just need to get back to understanding my rules real quick. Say I ended up taking, something against what I was looking at, right? And it goes the opposite way. Like we took puts, say we took calls up here and we just got dumped on, where was I so wrong? So for that, to handle that, you need to understand this. And that's, were you in line with your strategy? Were you trying to nail your entry? Were you aligned with everything else, you have as your, set in rules? So for me, I think the best way to get back and to handle losing is this, right? Keep your risk management how it should be. We keep our stops 20 to 30%, 25%, around there, depending on the trade, right? And so that ensures us that if we do lose, it's okay because we can live to trade another day. Now, handling that failure is all mental. It's a lot of mental gymnastics, and you got to just shake it off and be a trader. Don't be emotional and have the emotions tied to it. Whatever happens, you get into that trade, you nail your entry, you set your bracket or your stop, have limit trims ready to go. And however it goes, it's how it's gonna go. You don't need to stress about it. You need to take the highest probability of you winning, and that's it right there. That's what we're looking for. So getting back into that winning trade for me, I would say I lost doing, Google or Meta or some other name. I get back to the zones. I get back to playing the zones. I get back to seeing, okay, buyers here, right? Sellers are up here. I know to get back to a zones play. So I get back on the board, take some puts. We reject supply. I sell into the move. I make the money, and it's not about making the money you lost back. It's about mentally getting yourself back in the game. That's pretty much how I do things. So of course I have systematic things to it, right? I wouldn't touch a lotto that day. I would probably go higher expiration, longer expirations. I'm only sticking to SPY and Q, sticking to my zones, of course, systematically trimming into the move. And I'm looking to nail my entries. So if you're shorting, you need to be looking for a green candle. If you're longing, you need to be looking for that red candle kind of pushing down and then up. So even if you're wrong, you're still going to be up on your position to get that 10, 20, 30%. From there, stops bye-bye. You can always, protect your position. So if you notice, every time I win, or I've noticed that every time I win, I win big following a lot of these rules. So to get back on that winning side, keep it simple. A lot of these traders want to put on 5, 10, so many trades a day, thinking you're going to stop the bleeding and your account's going to turn around. No, you need to stop the bleeding by doing less. One trade, snipe mode, banger, win, call it a day. And you need to stop the bleeding that way. Do less. I'm only taking 1 to 3 trades a day. If not more, if I do 4, that's pushing it, but I'm going super small and just playing with profits. But usually I'm averaging 1 to 3 trades a day, averaging 10 trades a week, sometimes 11 or 12, sometimes 8, but around 10. So we're averaging 1 to 3 a day. with the first trade being my heaviest size, second one being half the first one, and then third is just lotto size, 1 to 5 contracts, 1 to 3, just a few of them, right? So for that, I want you to focus on, your strategy, handle the losing like a gentleman, be a trader, stop being so emotional tied to it, and understand where your levels lie. If you know if you're going to reject up here, puts are going to work, slam them with some conviction. So that was that first question. Moving on to the second question, it is how to determine how many cons to buy. So how many contracts to buy. And for me, I like that. So it would be something like this. If you see a high conviction setup where you see a bear flag and then you see a name like NVIDIA break down out of a demand, out of the bear flag, and it's just dumping, it was already weak pre-market, size up. That's where you would say, all right, this is a pattern I played over and over again. I'm sizing up here. Now, say we're looking at something where, maybe, let's see, maybe Apple, is strong pre-market and it's close to a breakout, and we see that the market is kind of, pulling down a little bit. I want you right here where you say, okay, Apple's trying to break out here. I have to take these calls. I'm sticking to my strategy, but I'm going to size down because I don't feel okay about this. It's possible this is a failed breakout coming, but I got to try it anyways. Not saying you could have not made money here. This was over a dollar move right here, a little less than a dollar move. You could have made money on some Apple calls, protecting it, getting that 10, 20, 30 systematically trim. So I want you to look at around the market and say, does the market support what I'm about to do? If Q and SPY were pulling back pretty hard here, 15, 30 minutes after, and you're seeing Apple, up here still and the market's pulling back, more than likely it's going to be a failed breakout. So I want you to understand that, recognize that, and say, I'm just going to size down. This is not a high conviction setup for me. And of course, my overall rule is if it's not a hell yeah, then it's a hell no. So if you're not saying this, if you're not seeing something like this going, hell yeah, I'm about to slam heavy on this because I know this pattern and I love it, then there you go. If you're seeing Apple kind of break out and you're like, I don't know about this, then maybe hell no, don't touch it, or size down super small. So that's how you determine how many contracts to buy. Next question, we're looking at risk management. So pretty much I kind of covered in the first question, risk management, right? For me, I'm always nailing my entry, because if you nail the entry, I will never get stopped out at 20-25%. I keep my brackets, I keep my stops at that, no matter what it is. Lottos are a little bit different as far as stops, but I'm talking 1 day, 2 day, or weekly expirations on these contracts. Risk management is always going to be 20%. If that stop hits 20%, I didn't nail my entry. I know my trading well enough that if I nail my entry, it will never stop me out on that 20%. It will never go against me like that. And sure, it might come back. It might hit your stop, and then come right back up and you win on the trade. Well, that's fine, and I can live with that. I can't live with it going past, not stopping me out because I didn't have a stop, going past and not coming back and not be a winning trade. I can't live with that. I can live with it stopping me out for 20% and it, running, and then me going, okay, it did exactly what I thought it would. It's just stopped me out because of my entry. My entry was not on point. I can live with that all day. So risk management, keep those stops, keep them in play, because the best trade or the best trades you take will never go against you. You won't even be red for a second. Especially with these lottos we took on Q on the second round, we weren't red on a second. It was enter and it was nonstop action. That's how it should be. So I want to protect you, or protect your position in the risk management of keeping those stops and keeping those kind of parameters set for your trading, and then just do less. Let it work. Give it time. Let it work. Sit back. You don't need to micromanage it. Say I'm taking profit here, or I have my stops locked in. Let's do this. So just give it some time. And have that. So hopefully these questions help. I'm going to be making this a series, so more questions members are going to be asking. I'm going to be making videos about it. So hopefully these 3 questions I covered right now helped a little bit more. Like I said, handle losing like a gentleman. You're traders. Be a trader. Be aggressive. It's okay. As long as you're keeping the risk management, and then you'll be handling losing perfectly. Getting back into winning. Stop being so much in your head. Just get back to trading. That's it. we all lose. Doesn't matter about the lose. It's about winning, and it's about letting the winners run too. So stops above buy, risk management right there is keeping your risk management. Once you're up on the position, move those stops above buy, no longer 20%. So risk-free trade, sit back, let it work. And of course, how to determine, how many contracts to buy. If it's a setup you're seeing and you've played it over and over and over again, size up, get ready. You say if you're loving this and everything is flowing for you, go for it, size up. If you're about to take something where you're like, I don't know, and you feel like you're kind of forcing it, size completely down. It's okay. You can always add more if you want to a normal position, but you can't always, take out the contracts once you're already in the position and it's going against you. So handle your risk management properly. Handle losing like a gentleman. Get back into that winning by trusting your strategy and doing less. And of course, determine how many contracts you can buy by just simply understanding where you are in the market, the setup, and is this something you're confident in taking. So beautiful, beautiful. I wouldn't have got sized heavy right here on Apple for upside, but I would have sized heavy here, rejecting this zone out of this flag, knowing market's pulling down. That's supporting puts for Apple, and I'll take it back down to 230, and it's exactly what it did. Beautiful. So hopefully this video helped you out. Thumbs up, like, comment, subscribe, send it to somebody that absolutely needs it, and I'll see you on the next video.
I just want to say from the bottom of my heart, I'd like to take this chance to apologize to absolutely nobody. The double champ does what the he wants.